Hey everyone, welcome to yet another episode of the Magic Formula Portfolio Series. This is my fifth installment of this series, where I'm building a portfolio using Joel Greenblatt's Magic Formula investing strategy, which is a very simplified strategy that aims to kind of take value investing principles, trying to find relatively high quality businesses at relatively cheap prices. That's what this index of sorts is trying to do. It's a very simple strategy that looks at the return on invested capital of all the businesses in the stock market, and it also looks at earnings yield. That's the other factor. So relatively high business quality with a high return on invested capital, and then relative cheapness, looking just at earnings yield, or how much money a company's actually throwing off relative to its price. And here we can see the Magic Formula portfolio. I did make a pretty substantial change to it just now, where I actually consolidated the portfolio into fewer holdings. I'll get into why I did that in just a second. I talked a little bit about it in last episode for those of you who've been following the series. By the way, now would be a good time to hit that subscribe button if you want to follow the journey through this Magic Formula portfolio to see what happens in real time using the strategy. It has been fairly well studied, but the whole purpose of this series is to get some data on how the portfolio does in real time rather than just back testing from, say, a decade ago, because the market is always changing. Now, sure, there's lots of things that stay relatively the same, but the different sorts of environments that you're in might change the different performance of different stocks. That includes value stocks versus growth stocks. We've definitely had much more of a growth era in the last decade. We'll see what the next decade holds. Anyways, I'm just using this as an opportunity to test out the strategy and collect data. And I always include a tracker spreadsheet, which I'll show you right here, showing the current Magic Formula portfolio and also showing all of the changes I make in a given month. So you can see if you go down to these bottom tabs, I show you everything that was removed or added, but this is the current allocation. And you can see that it is very heavily weighted towards pharma stocks, still is, probably always will be. That's something I might consider for the future, and actually removing pharmaceutical stocks, since I think they're sort of the anomaly in here that probably don't fit the actual theme of the Magic Formula portfolio, and that is trying to get high quality businesses at great prices. And I think the quality metric is not particularly accurate, at least for a longer term hold with pharmaceutical stocks. If you're looking at last year's return on invested capital, for example, it might be abnormally, or more importantly, unsustainably high because the company released some sort of drug or something, and it might not have that long of a runway to keep that return on invested capital that high. So what I'm really getting at is it's temporarily high, not necessarily permanently high. And that could be true for about any stock in this screener. I just think pharma stocks are probably more susceptible compared to the other industries. But anyways, that tracker is always in the description below. Back to the portfolio. You can see that the performance has actually lagged the overall market if we're going back about 5 months. I have been adding money to it every single month, so the portfolio value is still going up, since we're really not at the point where my monthly additions of $500 are not significant, since it's still such a small portfolio, but I'm going to keep adding to it. So I'm basically dollar cost averaging into the Magic Formula portfolio. And I recently consolidated it down to 30 stocks rather than the 50 I had in the previous handful of episodes. So now it is down to 30 holdings, the top 30 holdings from this screener, the Magic Formula Investing Screener. It is free. You just need to sign up for an account, and then you can use the screener for free and see what the top 30 or 50 stocks are based on the market cap limitation that you set here. So here it has to be at least $50 million, which is the recommended threshold that the book, the little book that beats the market, says to use. So that's what I use here too. We got $50 million in market cap as a minimum. And then I was doing top 50 stocks, but I decided to do top 30 stocks, since that's really what the book recommends. And actually go to this excerpt right here. That's why if we actually use the Magic Formula, we'll want to own 20 or 30 stocks at one time. I was going for 50, thinking that that would get me a more accurate average. But really the argument the book makes is that theoretically, you really want less of the top stocks, since if the top 10 stocks are relatively better priced than the 10 to 20th stocks, you'd want to have more of that in your portfolio. So it follows that you'd probably want to focus more on the top 30 than the top 50 if we're going off that logic, which seems to make sense, since the Magic Formula screener is a ranking system. It looks to see what the top stocks relative to the broader market are based on those two metrics, return on invested capital and earnings yield. So it follows that the higher up this ladder you are, the cheaper or higher quality the business would be based on those metrics. Of course, it's not science by any means. And I have covered some of the flaws with this methodology in previous episodes, and I might adjust it at some point. Probably want to get a little bit more data, but I thought it was still appropriate to pull the trigger and reduce down to 30 holdings. So we can actually see what my changes were for this previous month. Here are all the transactions that happened. The only new holding here is actually Sleep Number. That was added into the top 30, and apparently it was not last month. So that was added to the portfolio. These were all the ones that were removed on the right. We have Zoomies, AMC, Dick's Sporting Goods, Sturm Ruger, Vontier, L Brands, Cigna, Trinet, Deluxe, Gilead, Blueprint, Viacom, CBS, Voyager, Ironwood Pharmaceuticals, Best Buy, LifeVantage, Unisys, and ABM. And the ratio of pharma stocks versus non-pharma stocks seems to be about the same in either group. It's still about a third of the portfolio even after all of these transactions. So that was kind of interesting. I was wondering if more pharma stocks would be left in or removed based on this change. But otherwise, I have consolidated it down to these top 30 holdings. And that's one thing that's handy about this platform, M1 Finance. If we go back here, we can see that you can set your target allocation in the portfolio so that my holdings that are relatively underweight are added to first. So theoretically, that would mean that if a stock went down while another went up, as long as they started at the same starting point in value, the next month, the stock that went down is probably going to have more money added to it. You could say that's watering the weeds rather than watering your actual flowers that are growing and actually have more of a future. But my thinking is that if it was enough to make the list before, and if it goes down in value a month later, I would want to add more to that position if it really is a high quality business that was already at a good price. But of course, this is not a perfect science and by no means is financial advice either. I definitely recommend you do your own research before you dive into any of this. If you're planning on using the magic formula, if you're planning on making adjustments to it, we had a whole episode on that last time around. Definitely check that one out if you haven't already. I had Brad Kellner to talk about how he adjusts the magic formula portfolio for his own little experimental side portfolio that he actually runs for his daughter's retirement account. But you might say that these results have been relatively disappointing. And to that, I would say, I would agree. We are almost half a year into this. We're on month 5 of what's going to be a multi-year journey and seeing what happens with the magic formula portfolio. And again, I might make some adjustments in the coming months. This is the first major adjustment that I've made, which is consolidating down to 30 holdings. And that's actually because there's quite a lot of work to manage 50 holdings anyways. I had to make lots of adjustments since there seemed to be quite a bit of churn in the top 50 holdings. We'll see if that same amount of churn happens in the top 30, but at most, I'm only adjusting 30 holdings rather than 50. So that was getting to be a little bit annoying. And the whole point of this experiment is to find a semi-passive way to invest like a value investor, because value investing often is super research heavy. And this tries to take some of the work out of that. It's a magic formula after all. You're trying to do something that is more passive when you're using this portfolio. And even if you don't want to go with the magic formula as pitched by Joel Greenblatt in his book, you could still pull some pretty good ideas out of this. One of my larger holdings is Turtle Beach, which happens to be on the list again. That is a gaming headphone company, but they have a lot of gaming supplies outside of headphones as well. They really have a large share of the console market, for example. I knew about this business before it actually entered the list. When it did enter the list, I thought, hey, that's actually a pretty interesting holding. I know something about that business. So I did some more research and I really liked it. So I added it to my larger portfolio that I do in my monthly M1 Finance series, which is the same platform. But that's my larger stock portfolio. That is my taxable account. This isn't an IRA to take advantage of not having to pay capital gains taxes on all the transactions that I'm doing in here. That was the idea, since I'm doing more of a dollar cost averaging approach and rebalancing pretty often. So I wanted to do that within an IRA, but that's a great thing that the magic formula can do. It can provide great ideas that might fit your portfolio. So it's definitely worth following. And if you want to get started with this version of the magic formula portfolio, I include a link to that in the description as well. If you have an M1 Finance account, you can actually copy this portfolio straight away. Again, not financial advice. I'm not saying you should invest in this or not. This is an experiment for me after all. I'm not sure how this will do in the future. I'm not doing a ton of research into many of these companies since, again, the goal is to have a semi-passive way to invest like a value investor. Maybe this is the best way, maybe not. I'm sure acquirers, multiple people will say otherwise. So that's what I got there in the description. Take it for whatever you think it's worth, and you can always adjust it if you want to use this as a sort of base or addition to your existing portfolio. We'll see how performance does over the next few months now that I've consolidated down to the top 30. I doubt it'll be too much different, but we'll see what happens. 30 stocks is still relatively diversified, especially between all the different sectors we have. Even though it is very heavily weighted towards pharmaceutical companies, it still is only a third of the portfolio, which means 2/3 of the portfolio is a bunch of other stuff. So we'll see how diversified it is and how it behaves as we move through the coming year. And there's no guarantee that I keep pharma stocks all the time. Definitely let me know what you guys think I should do to this portfolio. If anything, I might not do it for a little while, but if you guys have any ideas, or let me know what you're doing with the Magic Formula strategy, if you're using it at all, if you're paying attention to it, do you utilize any of the things from the Magic Formula screener or anything like that? Definitely let me know in the comments below. Would love to hear your insight. But otherwise, that's all I've got for today. So if you like this video, please like it, since that would help the channel out a lot. And if you want to see more about this Magic Formula investing strategy and watch my updates through this series, I post them every single month on the 28th, at least that's in the US. I'll usually post them on the evening on the 28th, so whatever time that is where you're from. But I also have a lot of content about investing, real estate, and pretty much everything else has to do with personal finance. So if you like that sort of content as well, be sure to subscribe, since I put out new videos every single week and wouldn't want you to miss out. But until next time, take care.